appreciate all of you guys being here and being here on time. We're going to start off this meeting the way we start off every meeting, and that is with wins. And so we celebrate them. We love to celebrate them, large or small. If anybody has a win that they'd love to share, we'd love to hear it. So just go ahead and unmute and tell us the good news of what's going on.
Hey, this is Dwayne.
Hey, Dwayne.
We actually rented more dumpsters the month of January and February since we've been in business.
Oh my!
Wow.
And
Is that why
sorry,
you're avoiding
Jonathan,
me?
I was fixing to say I've been ghosting Jonathan for a week and a half now. So, hey, Jonathan.
Good to hear your voice. That's a huge win. That gets me excited. Wow.
Yeah.
Let's go.
Okay. Shatoya, I saw your hand go up. What's going on?
Yes, I feel like I finally got my system back in place for my interviews and my hiring system. So this week I had my first interviews back on. So they went very well. I don't know if Kevin had anything, but that's my win for the week.
Wow.
Let's go.
Yes. Love that. Love that. Any other wins?
I'll share. So it's not completely a win yet, but we're in negotiations right now to purchase and absorb or merge with another flooring store that has gross profits of about an average 3-year over 1.5 million a year, averaging 38% profit margins. And we are in negotiations of buying that flooring company and merging with them. So exponential growth. If we bring in that company underneath our belt, it's pretty exciting to see what the future is going to hold if these negotiations work out.
Yes.
That is awesome.
Yes.
Yeah,
Excited
pretty
to
exciting
hear it.
times.
Wow. That must be quite the back and forth with negotiations on that, I bet.
It is. Yeah.
Well, we're excited. You'll have to keep us updated on what's happening.
Okay, will do. We're digging into the books right now just to make sure everything is what they say it is. And
yes,
it's really nice to have Tim's help through this whole process.
I actually met with him earlier today and he was talking about that. That's like his area of expertise and he loves to do it. And so he's very excited.
That's awesome. I know I never felt on such a big move. I've never felt more comfortable and confident pursuing this, knowing that I've got Tim in my corner to help me through this process. And
Papa Tim.
Yeah, so
we'd love to hear it.
That's awesome.
That's incredible.
Yeah,
I have a little win. One of the Terra installation guys, they're partners here. They're actually brothers, but I'm going to call them the Terra brothers from now on. I don't know. I don't think they're here right now, but if they are, just interrupt me. They talked about gaining a new client just this last week. It's a good reminder for everyone. And the reason they called them and said, I'm not even going to take any other bids because of your Google reviews. You have me sold already. So tell me your price. Let's get this done.
Wow.
Woo.
Google
We'd love
reviews.
to hear it.
You got to get more Google reviews. So yeah, they're at 78 right now. And I said, you know what happens when you hit triple digits Google reviews? That's nothing. It just it just looks a lot better. You know, just
beautiful delivery. Yeah. Well, Leo, I know you've got a win with Google reviews recently. In the last 24 hours. I'm putting you on the spot. All right, I'll say it for you. So Leo, we just sent the email campaign. He gave us an email list, and in the last 24 hours, we've already gotten 8 new reviews on his business listing, which previously had 34. So that's pretty close to a third of the amount of reviews that he had new on there in the last 24 hours. So it can happen, folks. It works. You just gotta give us lists, and we'll email and send them out.
We love it.
Cool. All right, well, I'm going to go ahead and take us away from here. If you have some wins that you're dying to share, please interrupt me, and we'd love to celebrate them with you. But we're going to get into our content here for this afternoon, evening. As you guys probably saw in the emails, we're talking about consulting your own P&L statement? How do you manage this? What does it look like? What does it tell you? You know, why do we have these things? So I start here because I think that first things first, we gotta be comfortable with this. Nicole, I put this slide in for you. I know that you're the numbers queen, but I know that you resonate with a lot of people in that numbers suck. They're intimidating, they're frustrating. Spreadsheets, they can get complicated, but I want to encourage us all. This is not going to be too complicated. I'm going to try to keep it straightforward, and we're going to keep it understandable and actually do something with it. So we may all hate math. We may hate numbers. If you do, please stay with me. Please stay with me. All right. So how many of you have ever gotten a P&L statement from your accountant before? Just kind of raise your hands or just kind of a nod or anything like that. Okay. Whenever you got it, did you know what you were looking at? Did it make sense for the most part? Okay. A lot of people that I work with and that we work with and talk to either have never asked their accountant for a P&L statement or don't really know why they would or what value there is from it. A lot of times too is because they feel like they already know what's going on. You know, I see my bank account, it's empty, or I'm struggling to make payroll. What do I need
You
to know
said
from
a
a P&L?
key thing there, Bryce, is you feel like things are going on.
It's true. It's true. We got to get away from feelings, folks. We got to get to facts. So when we're talking about these things, we need to know the numbers. We have to look at them, even and especially when they're bleak. Just knowing, you know, they're not great, or I don't have much in my account. That's not enough. It's not enough. So we want to tell the story, get to the why. The only way by doing this is looking at the scoreboard. So I know tracking in general is not a really sexy topic, but it's probably the single best thing that you can do for your business.
I think it is.
Thank you, Jonathan. It is. It's probably the single best thing that you can do for your business. It's the scoreboard. If we're not keeping score, what else are we doing here? You know, why are we going about this? If we can't tell the story of why, we're just going based off of our feelings. So take what we're talking about today, put it underneath the umbrella of tracking and knowing your numbers, and just add this into it. Don't let yourself be intimidated by the fact that it's a financial statement and people with, you know, people have to hire accountants and this is a complete role or anything like that. Just don't worry about that. There's value that you can have from looking at your P&L. So getting into it, guys, we need to know numbers, and a big part of this, if you walk away from today with nothing else, walk away from this, I should get a look at an accurate P&L for my business. I should get a look at my P&L, because if you don't know your numbers, you don't know your business. That's something that Marcus Lemonis said that I have on here, the slide. A couple of things overall, coaches, I want you guys to kind of include some ideas here as well, but from other clients, if you've ever gotten a P&L or just have a general knowledge of it, what are some of the most common reasons that you guys have found that a P&L might not be necessarily accurate? Things that make it confusing or not make sense. You can chime up with anything. Put it in the chat.
A big amount categorized as like miscellaneous or undefined. Or ask your
Huge.
accountant. I've even seen
Right.
that where it says like ask your accountant $30,000, and it's like, why? My accountant's the one putting this. Yeah. What does that mean?
Yeah, huge. Yeah, uncategorized expenses for sure. Anything else? What else?
Taxes.
Yep. Your book's not being reconciled. I see you in the chat, slacking, you know, just not keeping up with it for sure.
Sometimes taxes aren't even in the P&L. We don't even have it categorized.
Yeah. So there's a lot of ways, a lot of places that we can get this wrong. You know, the numbers maybe don't seem accurate. The first thing I want to tell you is just trust your intuition. You know more about this stuff than you maybe trust yourself to believe. If the numbers look funky, you know, where you have the same number for your income every single month, or you're seeing $75,000 for the year instead of over a quarter. Or maybe even numbers that you can look for on your P&L, kind of anchor points of, hey, I should know generally what my payroll runs me month to month. If that's not adding up, trust your intuition. You know more about this. Oftentimes the biggest reason, and Nicole mentioned this right out the gate, that P&Ls are inaccurate is because expenses haven't been categorized. And what that often does to you too, especially if you're using QuickBooks, is they actually won't show up as expenses in your P&L. You'll look way more profitable than you actually are. And that would be another question mark that pops off, and you would have your intuition of, what the heck? How am I only spending, $10,000 this month? That's crazy. Another thing that would be important too is making sure that your business accounts are connected so that they can be reconciled, that everything that spends money for your business can be a part of it. The next layer of complexity, and this is the way I want you guys to think about this whole thing that we're talking about today, and this is true for your business in total too, is as we're building things to scale and do better and things like that, we're building layers of systems where we cover one thing and we move into the next. We make a system, we build it around this one thing, and then we move into the next. So as far as the accounting and the financial side goes, take it from a high level view first. That's why I'm not even showing us a P&L yet to go into the details and just talking about these overall concepts before we even look at that stuff. So let yourself grow with understanding and complexity as you get each part kind of figured out. So first thing, trust your intuitions. Whenever you see a P&L and you're not sure, you have some question marks, trust that, ask questions. Second thing, always put your P&L into a percent of the total sales, revenue, or income. This is called common size analysis. If you've ever heard that term thrown around, this is what this is. If you just see a P&L that has numbers on it, more than likely, my thought would be, well, I don't know how much this, is this a good number? Is this a bad number? Is this too much? Is this too little? I don't know. Making it based on percentages is going to give you actual insights from your P&L statement. So always put it in a percent of total revenue. And then the last thing here that I'll put is, if you only use a bookkeeper for taxes, consider using one on an ongoing basis or ongoingly. Yes, they're an expense, but you need to know these numbers in your business because you can establish rhythms and habits for yourself, but having an accurate P&L is irreplaceable. You can't get around it. Nicole, looked like you were gonna say something.
I'm gonna overemphasize. Yeah, very. What I tell people all the time is, if you are unwilling to pay or hire a bookkeeper, somebody to accurately take care of your books, this is not something that you can just, oh, well, I'll just have my brother, my wife, or, oh, I'll just use it in QuickBooks, or I'll just do QuickBooks. That does not replace it. Unless you are willing yourself to put the time, take the courses to become an expert in bookkeeping, you need to pay somebody else to do it. And there is no better investment that you can make for your business than having an accurate bookkeeper. Now, that does not mean that, oh, well, I hired a bookkeeper, they're taking care of it, I'm sure things are fine. No, you still need to be involved. You still need to meet with them. You still need to be aware of what's going on. You still need to be able to look at your profit and loss statement that they give you and ask questions. It can't be something that you just automate and forget. But if you are unwilling to take the courses to become an expert in bookkeeping, then you have to make the investment. Otherwise, you're going to always operate by and it can get you in big trouble really quickly. We've seen businesses go bankrupt because they did not know their numbers and they were so distracted by revenue that they were ignoring profit. They're ignoring their percentages. And so just there's no better investment that you can make than finding yourself a good bookkeeper.
Preach it. I love it. Yeah, and I see Fabio agrees. It's true, folks.
Fabio,
I don't need to beat the dead horse. So yeah, getting an accurate P&L is the first step. What we're going to talk about for the rest of this time is more focused on, okay, that base being covered, what can a P&L statement tell us? And why is it valuable to you? Why do I make that investment in making sure that I can get an accurate look at my numbers? So that was the first thing. Let's look at some stuff. Have I lost anybody so far? Does anybody feel like this yet? Okay, good. Hopefully not. If you are, just stop us and we'll talk about it. And hopefully we'll get some more time to talk about it in the breakout rooms too. But this is probably what most of you are going to kind of look at to see a P&L, or what a P&L is going to look at that you guys will see. Especially if it's coming from QuickBooks, these look pretty similar. Now, again, remember what I said before, trust your intuitions. Always put it in a percent of total sales, revenue, or income. And that's what I'm going to have us see here is immediately this P&L has some things that we can look at and, you know, be curious about. The first thing is that it wasn't in percentages. It just was raw numbers. We don't know what that means. Is this a good business? Are they doing well? Or are they not? So went ahead and took these numbers. And again, it's this percentage of the total income. I don't know if you guys can see my mouse, but I think I can do it with this pen.
Yeah, we see it.
Oh, you can?
Yeah.
Sweet. Whoop. Percentage of total sales. Okay. So what that looks like is for cost of goods sold, there's 5 main parts, and I'm going to cover this on the next slide here in a second. But there's 5 main parts. You got your income and expenses, total cost of goods sold, your gross profit, your ordinary income, and then your net income. Or sorry, I said that wrong. Not your ordinary income. I want to look at your total expenses. Total expenses. Okay. So again, take the number that category puts out, divide that by your total sales to get into this common size analysis. Some things that are really helpful when you look at this is if you can break it down into months, you'll be able to see consistencies, flows, patterns, those sort of things. All we're looking for with stuff like this is just patterns. So things you should be able to expect is revenue being relatively the same or growing month to month, somewhat consistent gross margins as long as your pricing is consistent, and then somewhat consistent percentages month to month. If you don't see that, it's just a pattern of asking the why question. So I'm not going to stay on this slide long because I'm going to talk about these overall concepts, but I just wanted to show you what one would kind of look like. And the first thing to do is just put it in percentages so that it's understandable to you. I don't even care about the rest of these numbers yet. And so you shouldn't either. Again, keeping it simple. Still with me?
We're with you.
Okay.
A few things that I just want to point out, and Bryce, this might be things you talk about later. Sorry if it is.
Yeah.
But for a lot of you guys are contractors. And so a lot of you, your cost of goods sold is going to typically be, and this is ballpark, it's going to be different. You are going to talk about this?
Oh yeah, it's the next slide.
It's going to be a lot higher than 6%. So when you look at a profit and loss statement, that would be a red flag. There's no way
Right.
in HE double hockey sticks, my cost of goods sold is only 6%. That'd be a red flag. You know, maybe we've got some cost of goods sold expenses down here in overhead. You know, those are things that you want to be thinking about, that you want to be looking at.
Mm-hmm. Yeah, that's exactly right. I was going to save the gotcha for after we talked a little bit more about this, but yes, this is a bad P&L. Just so that you know, this does not give us a really good accurate picture, and they've got some things that are out of whack that we don't necessarily want to see. But yeah, again, stay with me. Don't get confused. I just want to take it, you know, piece by piece, step by step on this. Uh-oh.
I told
Gotta
you
get
we
rid
saw
of-
your mouse, Bryce. You had to be fancy.
I know. Try new things. Okay, so what are the overall parts? I talked about them a second ago. I'm going to also give us some ideal percentages. Again, putting it in the common size analysis. What do we do with that? What does it mean? Nicole obviously knows, she's a coach, one of our coaches, so she knows the kind of percentages she's looking for. I want you guys to be informed as well. Again, reiterating, if this is complicated to you, take it in various levels of complexity and detail. You know, just talk about the overall 5 things and try to get these numbers, you know, to tell you some answers. But here we go. Income and sales, if it's a percentage of income and sales, 100%. Yeehaw. Easy place to start. Now, the second piece on your profit and loss statement is the cost of goods sold. Nicole said this, if it's 6%, that's crazy. Your cost of goods sold is what you can consider variable expenses. Does anybody know kind of a rough definition of variable expenses? They chime in.
expenses that are not fixed.
True, that is accurate.
Materials, supplies for jobs, subcontractors,
Ex-
anything on that.
Fuel.
Exactly right. Yes, yes, yes. Okay, yes.
Electrical bill.
No, you're wrong, Jonathan.
Oh, shoot.
So
Fire
you're-
them, get rid of them.
get out of here. So the variable expenses is stuff like Darren said, they move. They don't stay the same every time, no matter what. This is the costs that directly go into producing a job. Nicole has a really great talk on this, where she talked about the difference between cost of goods sold and kind of overhead. Simply though, it's just if it costs you something to do a job. So materials and labor are the two things that make up variable expenses. On the P&L we looked at that last slide, they did not include their payroll or their labor into the cost of goods sold section. And that's why that P&L looked so far off and didn't make much sense at all. And kind of would give an inaccurate view of how well they're doing. But we want to see this category of your profit and loss statement be within 60 to 70%. Kind of that range is a good spot, a healthy spot to be in. If you're a general contractor, which I'm sure we got a lot of those in here. If you're a general contractor, more than likely that's going to be a little bit higher. Now, the reason for that, right, is you're paying subcontractors. So there's going to be some profit margin in there. You don't have a ton of overhead like you would if you had a bunch of employees. So that 60 to 70%, maybe a little bit higher. You would just still be close to that range, but just a little bit higher. So from your income and sales, if your cost of goods sold is between 60 and 70%, then what's taken out, what you're left with is where we get this gross profit number. We want that to be around 30%, around 30%. That's a healthy spot to be in because it leaves you some meat on the bone, not only for your profit at the end of the day, but also your operating expenses, which are also considered your fixed expenses, which is the next category. So your operating expenses should be about 10 to 15%, roughly. Again, this is where it kind of changes because this all goes into itself. It builds down to the bottom of the profit and loss statement. So then at the end, obviously everybody knows this number. We want to be somewhere around 20% for a profit at the end of the day. At least 15% is a good spot to be in. Again, I know this seems simple and I want it to be simple. I don't want to add in all the details yet. These are the overarching things. Take this loosely as kind of guidelines. These are not exact things like if I'm not hitting this, my business is going under tomorrow. No. Don't hear that. Don't hear me say that. That's not the case. Again, these are overarching ideals of where we want to be.
A quick comment for those profit first experts here in the room. The
Yes.
operating expenses is not the same as the profit first definition of expenses account. Just an FYI, you will not be allocating 10 to 15% in your operating expenses account with
Yeah,
profit
don't
first. You're not going to
Panic when you see these. These are traditional. This is how you would break down a traditional P&L. Profit first is a little bit different. If you're getting
Right.
confused, keeping them straight, like I sure as heck did when I first, went through profit first, book a laser call with your coach or shoot us an email and we'll straighten it out for you. But I was thinking that, Jonathan, I'm very glad that you you said that. It's going to be different.
Yes. Thank you for chiming in. That is true. Profit first is meant to be kind of a departure from traditional finances so that we can feel comfortable about it. So this is getting back to the more formal, what kind of statements are we going to get from a bookkeeper, an accountant, or a CPA, that kind of thing. So yes, OpEx is not the same. This is on a profit and loss statement, not your profit first percentages. Okay. One more thing before I get into the next part that I want to make sure to talk about here is, to a certain extent, again, this is the layers of complexity thing. If all of this makes sense to you so far, you're like, Bryce, why are you moving so slow? Let's pick up the pace here. Okay, here's the next level of complexity. The more broken down into parts you can make your profit and loss statement, the more helpful it is to you. Caveat, to a certain extent. Don't go crazy with it. You can get overwhelmed with the numbers. But what I mean by broken down into parts is this. The monthly breakdown, having it categorized by month instead of just looking at a profit and loss for a whole year. That will tell you much more detail that will help you make decisions. Everything we look at, we want to be able to make decisions from. Next level of complexity after that, I rarely see this, but I want to make mention of it because I think it's really valuable, is if we can break down the business into segments. Again, I rarely see this, but you can break out your income into service business versus new construction business, or XYZ sort of situations. A prime example of this, MPG Management, is one of my clients that I'm working with, and we're doing this exact thing. Their business, they're general contractors in Florida. Their business has been built for the longest time on partnerships with property management companies, doing kind of turnkey, tenant moves out, we're gonna refix this part of the business. We've been growing the residential side, people reaching out through Google, et cetera, et cetera. What we have found is that that side of her business, when we separated out the expenses from the residential side to the service side, on the service side, her cost of goods sold was 86%. That leaves 15% for everything else, or sorry, 14%. Huh. Hope someone caught my numbers there. That leaves 14% for everything else. There's no way.
I'm going to clip that out, by the way, Bryce. That's going to
thank you. Protect my image. Thank you. No, 14% for everything else in your business is ridiculous. You can't survive on that. So what that means is, okay, maybe we should cut that sector of the business entirely because it isn't helpful. And the reason specifically as well that we're talking about that is because the pricing is so competitive there that it's impossible, like they won't win any deals. So what we're going to do is kind of let it filter itself out by increasing our pricing there to be what it should. And if we win no deals from that side of the business anymore, so be it. It wasn't helping us anyway. It was making a $3 million company look like a $500,000 company at the end of the day. So that's the next level of complexity. Again, stay high level if this is what you need, but if you're needing more, then go there. Okay, still high level. We just talked about these overall percentages. Hey, Bryce, mine don't look like that. What do I do here? What are the parts? Here's where I want to take you. Follow a pattern of questions. And I think you could do this pretty much anywhere in your business, by the way, but specifically with what we're talking about today in your P&L, follow a pattern of questions. And I'm going to give us 3. 1, what is too high? On my profit percentage or profit and loss statement, what percentages are too high? 2, what percentages are too low? 3, what factors feed into that? Again, trust your intuition. You guys know much more about this than you may give yourself credit for. Consider the things that you can control. Whenever we're trying to fix a business or a P&L, it tells the story of the whole thing, by the way. So we're looking at all parts of the business because of looking at this one document. Consider the things that you can control, and it's not always about cutting expenses. But just follow this pattern of questions and trust your intuition as you go through it. Okay, my percentage for my gross profit is too small to give me room on the rest of my profit and loss statement for the other percentages. Well, what feeds into my gross profit? Well, the only thing above that is my cost of goods sold, right? Which is labor and materials. How can I fix my labor and materials costs? Does it have to come from cutting? Not necessarily, because I can increase my revenue. Well, we'll talk about more specific details in a second, but at a basic level, just repeat this pattern of questions. What's too high? What's too low? And what factors feed into that? Everybody feel good with that? Okay. Here's my last slide, and it's kind of meaty, so bear with me. My last slide before we go into the breakout rooms is still, mine doesn't line up with the ideal percentages. What should I do? So for income and sales, how can we improve this? Again, all of this comes under the umbrella of tracking. Not a sexy topic, except for Jonathan. He really loves it. I love it too. But tracking goes into all of this. We have to know the numbers. So how can we improve our income and sales? Well, are we keeping KPIs for our team? Are we setting goals and tracking how close we are to them? Or are we just kind of keeping up with it? There's this concept that I came across really recently, actually this morning. So it wasn't a part of my original setup here, but there's this concept of, I can't even remember the name. It's like income variability, something like that, where you guys have probably experienced this in the past. If you're used to making $5,000 a week, you're used to making $5,000 a week, maybe you'll have a couple of weeks where business is booming and we made $20,000 a week. Woohoo! At some point, we might fall back down to that 5,000. But if we ever were to fall below that 5,000, you bet your booty, we're getting in gear and we're going to figure out a way to get back to that 5,000 because that's not normal. Whenever we have an increase, we need to reset our mindset. Hey, I'm not used to 5,000 a week anymore. I'm used to 10,000 a week. So whenever we drop below 10,000, I'm gonna find some new solutions. I know that's a kind of new concept for me, but setting goals for yourself, communicating them and tracking them for your team is a way to increase sales without cutting any costs. It's a way to improve everything without cutting any costs. Second thing is pricing. We've talked about this. We're going to talk about it actually in a couple of weeks. So come back around in 2 weeks and we'll talk about pricing again. But you can move your pricing to make sure that it is profitable for you. Do an estimate comparison. Do an expense analysis. Make sure that on a job, you're not overspending what you budgeted for it. Another way to increase sales, consider how you can package services. Are we able to do tree trimming whenever we're hanging up Christmas lights? We're already there. We're already up in the trees with ladders. Can we add that service? Maybe. Or, hey, whenever we do a water heater install, more than likely, that person could use a garbage disposal. I don't know. Packaging services, putting together in a deal. There's a lot of ways you can go with this, but that can increase your income and sales. Another way is obviously investing in marketing. If you're not yet, again, this comes back to tracking though. If you invest more in marketing, we want to know what's working and what's not to invest heavier there. Everybody still with me? Okay, I told you it was meaty. So next thing, cost of goods sold. Hey, my cost of goods sold is way too high, 86%. What can I do? Okay, there's two factors that go into it, material and labor. Those are the main things. So for materials, consider your inventory. Are we keeping too much stuff on hand rather than buying for the jobs? Do we have a bunch of old stuff that we bought for a job that never went through that we can just use on this next one, or we should use? Get it out of here already. Also related to materials is competitive bidding. I would consider materials and subcontractors in the same category, by the way, in terms of competitive bidding. Having a short list of your main people that you're going to go to try out for jobs is going to be helpful for you. I think ample example about this. Some of you may know because you've been around. I built a fence for myself, I don't know, this time last year in April. And I did some competitive shopping just between Home Depot and Lowe's. I found that it was going to save me $500 to buy my fence slats from Home Depot, but the fence posts from Lowe's. That's $500 on a $4,000 project. What the heck? Way worth it. So get competitive bidding on your materials and even on your subcontractors. For you guys as a business, I can't do this as a personal guy, just building his own fence. But you guys as a business should consider long-term exclusivity kind of vendor discounts. Hey, I know that I spend this much money on materials each year. If I'm going to make you my primary, so as long as you have the stuff I'll buy from you, can you give me a 5-10% discount? If you spend $100,000 a year, that's $10,000 back in your bottom line. And I'm sure most of you spend about that much in materials. So small things can make a big difference, and percentages is the name of the game. Okay. Oh, I'm clicking on the wrong screen here. Okay, cost of goods sold. Here's the second part, labor. Labor is not something that we want to make a bunch of cuts to. most of the time you guys are already operating at capacity. You know, hey, I've got as many people as I need, no more. And I don't want to fire people necessarily, which we talked about a couple of weeks back. All of this stuff relates. This is kind of an overarching topic. So again, keeping it high level here. It doesn't have to come through cutting. It can come through improved productivity. And that's where we primarily want benefits to come to your company is through improved productivity. How do we do that? Regular team meetings and trainings, establishing KPIs. We have talks on all of these in the inventory spreadsheet. So please go to these as you're looking at your P&L and you get into the different percentages and you're asking yourself these questions, go back to these things. So regular team meetings and KPIs. Set up an incentive structure within your business. Lavish on the 2 extras. The people that are doing really great, they're going to naturally come to the top if you set up a structure for them to really benefit from doing good work. If they finish jobs early and the quality's still there. If they get Google reviews that produces more leads for you. If they close big deals or they cross-sell or whatever it looks like. If they're doing the most home safety inspection checklists, who knows? Set up an incentive structure for your team. They're going to excel with the ability to make more. Related to this is merit-based pay. They're kind of one and the same, but you can restructure your whole pay system. A lot of plumbers, right? They're on commission-based pay. Salespeople, commission-based pay. When people have the ability to control their income, they can feel the benefit. Whenever I do more for the company, I make more. Okay, that's a literal win-win. Again, we've got talks on all of these. So check out the inventory call. Again, this is high level stuff we're talking about here. I'm just giving you a taste of all these things. I'm not sitting too long. Another thing, and this is the last thing in the labor part, is run an ongoing hiring system. Shaytoya, you talked about this, at the beginning of the call, that you're back in the flow of it. One of the best benefits of doing ongoing hiring, even when you're not necessarily needing to fill a spot, is that your team knows that somebody else wants the job they have. And we're not threatening anybody by that. We're just preparing for the next phase of growth, right? But people are going to be more productive whenever they know, okay, more people are going to come into this. If I don't keep up my end of the bargain, someone else could take that spot. Okay, last piece here, and I promise I'll let you go. Thank you for enduring my monologues here. Is everybody still with me? Is it all making sense? Okay, yes, lots of feedback, awesome. Okay, so operating expenses, again, different from cost of goods sold. The gross profit I skipped over because that is just a result of the cost of goods sold stuff. Operating expenses here, again, we want to be 10 to 15%-ish. The biggest thing that you can do for operating expenses is to do a triple D analysis. We've got a call on this as well that we talked about in the group calls. Triple D, what things can we delay? What things can we dilute? And what things can we delete? 3 Ds. Looking through your income statement, income statement, profit and loss is the same thing. Side note, looking at your profit and loss statement. If you're looking at your expenses and you're seeing, okay, there's a lot of stuff on here that maybe doesn't need to happen. Delete it. If there's stuff that can be diluted, meaning we can consolidate the cost. Dwayne, I think, talked about this a couple of weeks ago, that by paying insurance up front, they're able to save, what was it, like $10,000 a year, Dwayne? Are you still here?
We saved almost $7,000.
Okay, yeah. Doing stuff like this is going to be really valuable to you. Consolidating not only your costs, but also softwares. A lot of operating expenses, people probably have 2, 3, 4, 5 softwares that they're using for different things in their business. You consolidate them, you have reduced your costs and the complexity of your business, which in turn will also increase productivity. Consolidating also even roles within your business. Maybe you've overhired. Most of you, that's not the case, but some of you it might be. So these are my main things that I want you guys to know. I'm going to go back to this last slide. Well, the slides will be posted. You guys can access them. I was going to go to the one that shows the overall percentages again. Guys, if you get nothing else from today, know that your P&L can tell you the story of your business. And that's why it's important to get an accurate one. And you can ask the right questions. If you're not keeping score, you don't know what's going on, you're just going based off of feelings, you're a one-winged dove, just moving around in circles. You're flying blind, literally. You don't know what's going on, and that's gonna keep you stuck in this trap and in this cycle. So get an accurate P&L. If you hear nothing else, get an accurate P&L. And then once you have that, come back, watch this video, go through these percentages, ask these questions, and then take the stuff that's on this slide to find the group calls that correspond to them. I know that there's a ton here. This is a big topic. It's a big topic. So I'm gonna hop off my soapbox here, get us into breakout rooms. We got a couple of minutes to be able to do that.
All right, all right. Anybody who hasn't done this yet, you're gonna have a join button pop up on your screen. Hit the join button fast. Otherwise you won't get another one. Beautiful. Everyone's doing such a good job.